I'm Chris Doornbos, the CEO of E3 Metals Corp. E3 is a lithium technology and resource company located in Calgary, Alberta. We have both a 7 million ton lithium carbonate equivalent inferred mineral resource, and we've been developing a DLE technology, an ion exchange process to remove lithium from brines that we believe we can implement across the globe. So we bring both a resource and a technology combined to unlock this massive opportunity here in the province. The company's goal is to generate a 20,000 ton per annum project here by around 2025 to 2026, and then grow from there across our resource base to around 150,000 tons of lithium products. Right now, we're looking at lithium hydroxide as our first product, but we're also looking at the opportunities to expand into other markets, carbonate and lithium metal, as the advancements in technology for batteries continues.
Chris, thank you very much. That is an excellent and a full introduction to the company. Nice to meet you. We haven't met before. Welcome on. Good to have you in the interview on the show.
Thank you.
Lithium. I mean, it is the hot topic. It is the flavor of the month. All of the market projections are so positive for it. How did you come to be in the lithium space? Because I think you founded the company 6 years ago or so. That's quite a long way back.
Yeah, we were looking for a lithium project since 2014, and we founded the company in 2016. So we spent a couple of years trying to identify a project that had a real opportunity. And what got us into it in the first place was Tesla, as you can imagine. When you looked at their projections based on what they thought they were going to produce alone for just their fleet, the lithium market was already undersupplied for what they needed. And then if you just looked at the thought exercise of other companies getting into the space as well, other OEMs, lithium it's a bit different than other commodities because it doesn't have the production base that the other metals that go into batteries do, like nickel or cobalt. So you can't steal from another industry to build the batteries. You have to actually generate new supply for lithium. And lithium is the one element and metal in batteries that is ubiquitous. It's about 7 to 10% in almost every chemistry of battery that's out there in this space. So we understood the foundation of lithium, it was going to be a booming market if this was all successful. So we looked at that and we said, let's try to find a project. Let's get into this space. We all had this idea of an energy metals company. And over time, just this project that we have here in Alberta, it had its own legs. It just sort of took off and has continued to since.
And the lithium resource that you're looking at, is it an evaporite? It's a buried evaporite. Is that what it is?
No, it's actually hosted in a brine. And a lot of times we get coined with petrolithium. And the reason for that simply is that it was an old oil and gas aquifer. So it's called the Leduc. It was discovered in 1947 by ExxonMobil. Yeah. And they've been developing it. It's pretty much at the end of its oil life cycle now. They left it in the 90s. It's been in smaller and smaller companies' hands. When it was discovered, it was about 4% oil by volume and 96% brine, and the lithium was dissolved in the brine. So in that sense, the resource has always been here. We're just simply repurposing this asset to produce lithium. And the benefit that it was an old oil and gas producer was simply that we have a high amount of understanding in terms of the exploration development. We've had 60, 70 years of production in this aquifer. So
it really helps the flow characteristics because you've been entities have been pumping fluids out of molecules out of the aquifer for decades.
Yeah, that's exactly it. And although they weren't extracting lithium, the fluids have been moving around in this aquifer. We understand how to do that intimately. And, you mentioned your background's a geologist. So, that fundamentally means that this has never been an exploration project. It's always been a development project.
For E3 Metals. Now, I noticed there are quite a few people in your team who've got oil and gas background, and presumably that's because of the nature of it. This is why you're calling it a petrobrine.
Yeah, exactly. I mean, everyone except for one of our senior team, and even in the junior team, there's only a few people that are not hired out of our local workforce. And the ones that we've brought in from other places are generally the lithium experts. But how to move fluids, how to produce this aquifer, even the infrastructure and the design of the facility, all of that exists here. Our head of projects worked with me at the project called the Fort Hills in Northern Alberta. It was a $17 billion capital project. So we know how to build big here in Alberta. And he's now the director of projects at E3 Metals. So he's helping us get this project commercialized.
So just to be clear, when you say the local workforce, I mean, Calgary being an oil town, that's what it is. You've basically got an oil background, a team with an oil background.
Yeah, because this aquifer has produced as an oil aquifer. But at the end of the day, you're just moving a fluid. Doesn't matter if it's oil or if it's brine with lithium in it, you're just moving fluid. So yeah, exactly. This is, people here know how to do this.
Some of the notes I jotted down were all about permeability and porosity and fracture density and kind of flow and all that kind of stuff. But that basically goes, that line of questioning is kind of put to bed now. You can pretty much park it because there's so much data behind it.
I would love to get into the weeds if you want, but yeah, it's under. I mean, we have 4,000 drill holes into the permit area that we have alone from oil and gas exploration that have intersected this particular aquifer. So there's lots of geologic data that we can use and have used to backstop our resources. So, again, it's never been an exploration project, and our resources are fairly robust because we have a lot of data points for how the fluid moves through the aquifer.
Okay, really interesting. And I noticed that in your presentation, you said that the direct lithium extraction column that you are working on can cope with up to 86 milligrams per liter of lithium. Now, what I didn't understand or couldn't see was how much lithium is in the brine, and what's the concentration like, and is that constant, and does it vary with time, and how does the lithium content in the brine behave over time?
Yeah, from the sampling that we've done, we've gone back to so there is small amounts of oil production, and it's about 98% water cut, which means about 98% of the fluids that are coming out of the well today are water, and the other 2% are oil. And then what they're doing is they're skimming the oil off the top, and then they put the brine back down. And so we're able then to go, before that brine goes back into the aquifer, and sample it. And so we've done that at wells over time, and we've sampled as many as we possibly can. And there's over 100 and some across the permit area that we have that we've sampled. So the lithium grade is fairly consistent spatially and over time. So in the Clearwater area where we are looking to produce, we range from about the high 60s, so 69 to about 86. And we average 75 milligrams per liter in that area. But I will say that the majority of the samples, the distribution of them are fairly tight around the 75. Yeah.
So you've got a great deal of confidence then in that 75 is going to run as your... That's the kind of the basin scale brine content, 75 for want of a better number.
Yeah, and there's this thing called the law of diffusivity. And, this brine is 400 million years old. And they believe that the lithium has been in place fairly early on in its history through a process called dolomitization. So theoretically, the lithium should be spatially distributed fairly evenly unless there's a human impact to that distribution. We think there is a slight dilution due to human activity with where the oil is specifically, just because people have been putting water into the aquifer for enhanced oil recovery. So they add pressure by adding more water into the aquifer to get more oil out. It's a very common activity in oil aquifers that are water wet like this. So other than influences like that may have diluted the lithium grade very locally, the rest of the aquifer, which is the majority of what we're going to produce. In fact, we're not going to produce from where the oil was historically produced. We're going to stay away from that particular area and probably use it as our disposal zone, because we do have to dispose back. So we'll sterilize that, diluted area where the oil was produced, and we'll produce from unimpacted brine. But other than that, the grade theoretically should be consistent across the aquifer, and that's what we see when we sample.
And are you going to, so you've got injector wells and producer wells. What are the distances apart from, okay, let's just start with the pilot plant, because you're working on a pilot plant at the moment, which is the key activity, I believe, for this year, isn't it? The pilot plant is the big thing for this year.
Yeah, it is. For the pilot plant itself, we're going to be going to existing production. So the plan is, and we're working with a couple of operators in the area that have brine at surface, they more than enough for us to run a pilot. So for that particular piece of the process, we're simply going to tag into the back of basically just before the disposal well, take the brine, run it through our ion exchange system, take the lithium out, give them back the brine, and the brine will go back to the aquifer.
So you don't have to build your own set of wells, injectors and producers. You're just the pilot bit that you're testing is just the DLE, the direct lithium extraction.
Yeah, and not to say that we're not going to. We do have a plan to drill up to 3 wells this summer, but their first and primary goal is to define an M&I upgrade so that we can book a reserve for pre-fees. We may move the pilot to them at a later date, but the initial pilot will likely run on an existing producing site. It's very simple, and it does tag into how, when you asked about the commercial as well, the same thesis goes into the commercial development, because it's the same thing. We bring in the brine out of the ground through now our wells, and I have a diagram I can pull up, and we can talk through that as well. But
yeah, sure.
When you look at this development, and you have a series of wells that are producing from the aquifer. You're bringing it in all together into a pipeline that brings it 15 kilometers. So you asked about the distance. So that 15 kilometers gives us 20 years of production at a rate of 20,000 tons per year. And so,
okay. So what drives the fluid flow from the injection well to production wells? Is it simply that you're pumping out and therefore you're creating a pressure differential?
Exactly. Yeah. So we create a sweep effectively across the aquifer. And so, this will run for 20 years in this setup. Now, in the pre-fees that we will produce, it'll likely be that the wells will be further apart than 15K. We'll probably make them far enough apart that they'll be about the same time frame as the lifespan of the well. So that's sweep. But in this configuration, that 15 kilometers gives us 20 years of sweep. So if you wanted to extend the mine life, keep in mind that we have 160 kilometers by 45 kilometers. So we have a huge area here. So to either increase production or extend production, you would step back out further than 15K. You would drill some more wells. You'd start pumping from there, but you'd put the brine back down into the same disposal wells. And what that allows you to do is just step away from your brine as you produce out of this aquifer. And that's what we call our aquifer management plan, which is incredibly important for DLE because you have to put the brine back down. So you have to manage your resource in that way.
When you talk about putting the brine back down, did that go into the injection wells, or is this into a separate facility or separate area?
It goes in this configuration. It goes here in the injection wells at the top of this diagram. And then that sweep happens as the lithium void brine sweeps across the aquifer as you start pumping.
Okay, and while I look at this, I've got in the back of my head that the PEA put out a CAPEX figure of just over $600 million. Yeah. What excuse me, what proportion of that is from the ground and down, and how much is above ground, so to speak, in the plant itself?
It breaks out to about a third, and that's roughly. So a third is the wells and the pipeline.
Yep.
A third is the DLE pre-treatment portion, which is here, and then the other third is the polishing, purification, and hydroxide production, which are these two steps down here.
Okay.
On this, on the right side. So yeah, it's pretty even. The cost estimation for the drilling is fairly robust. We had drilling quotes, we had pump quotes for actual pumps and drilling. So, you know, when you look at a PEA, generally it's fairly desktop. But because we have so much data and companies are out here drilling and have been drilling this for a long time, there's a fairly solid understanding of the cost in that part of it.
Okay, so when I look at this picture here, is it fair to say that the injection wells and all of the production side is very well established, and that from the concentrated purified lithium downwards, stages 2 and 3, the polishing, purification, and the battery grade lithium production, that's also very well established. And then what your kind of innovation is that where that circle with the number 1 is.
You absolutely. So, you know, when we started E3, as I mentioned, this was never an exploration. Day one, we started a resource company. Day one. Day two, we turned into a technology development company, literally, because what we realized is that, and there were other technologies out there. The leading one at the time is now no longer applicable. It was a solvent extraction method. And we realized that to make this work, ion exchange was going to be the process, because it didn't require you to remove anything out of the brine prior to extracting the lithium, which means that your costs are significantly lower. Yeah. So this technology, this is the DLE technology diagram that we have out on our slide deck. And what this demonstrates is what we've developed. So when you look at what E3's proprietary side of this, it's the sorbent itself. So the company has developed a sorbent that is highly selective for lithium and has a very quick kinetic background. So it means that we can get a lot of the lithium out in a very, very short amount of time, which means that our overall operating costs are significantly lower. And it allows us to produce a high purity product. And so when you look at what we developed the bead, the sorbent itself. The process around it, the tank, is very common ion exchange processing equipment. So we're not reinventing the wheel even on that. So, but for the past, from pretty much 2016 until 2020, the focus for the company has been on developing this technology. So 3.5 years, and that was all on the bead itself. So last year, we announced that all of that development was done. And although we continue to perfect that bead itself, that's not the focus anymore. The focus has been on developing a process around it. We built a prototype in 2021. It was running before the end of the year. We're using that data then to design the pilot. So we run a lot of tests. We provide that to third-party vendors who make ion exchange equipment. They use that to understand the process parameters, flow rates, and that sort of stuff. And then they can design and build us the pilot that we need. So, although DLE is a new way to process lithium, it's not a new way to process elements out of water. And I think that's a really important distinction, because we're not really doing anything all that novel, except for the fact that we can get lithium out at high purity.
So can you give me some other examples of ion absorption in water?
So about half of uranium treatment is done with ion exchange. If you have a water softener in your house, that's ion exchange. Most municipal water treatment uses an ion exchange as part of there with some membranes to treat the water. Any commercial developments, like we have a lot of water treatment here for fracking up north in Alberta, a lot of that water treatment is using ion exchange. So it's used ubiquitously to get elements out of waters.
And I think the key thing, I mean, I'm completely new to this, but the key thing presumably is making sure that you've got the fluid flow high enough so that you can get the volume to be able to produce the tonnage at the end. But you've got the reactive element, or the sorbent, which is quick enough to pull out the element that you need in the time that's available while the thing is flowing across it. Because exactly. 75 ppm or whatever it is relatively low grade.
Yeah, and so what we demonstrated with our PEA is that we're able to operationally make that happen and do it economically. And of course, the next level is to demonstrate that in a pilot, and then we can go on and build a commercial plant. And so, we're taking the methodical steps that you need to take to develop a project like this. But it became clear at the end of 2020, and we outlined that to the market through the PEA, that this can be very economic. And the benefit we have is that the 20,000 ton PEA that we outlined is phase one. We go through phase 2, 3 as we grow, and we become 150,000 ton producer of lithium, because this aquifer is so big and so prolific that we can expand like that, which makes, if we're 150,000 tons, we're the biggest lithium producer by nearly double if it was happening today. So there's so much potential for this to grow and expand.
It's not a supply constrained, it's not a demand constrained market. Basically, the more you can produce, the happier the manufacturers will be. But can we just go back to the pilot plant and,
sure,
for my benefit, understand what you're going to be producing during the course of this year in that phase?
Yeah, so right now, the company is in the process of confirming the engineering firm and the design and the fabrication. So I expect it to take another 3 to 5 months to get that all firmed up and to get the fabrication started. And then the hope is that we have a lot of the pieces already built here in Alberta, which is true. There are some water treatment skids that could be repurposed for this. Not sure that we can use them at this point if they're applicable. So the hope is, though, that we can find one and we can bring in our columns and fabricate that together. And it means a simple build and therefore a short time frame build. And then we can deploy. The sort of outlier there is that we have to fab from scratch. And, so the time frame is Q3, Q4, but it's pretty broad right now because of that, the need to actually construct from scratch, which is the unknown at this point in time.
Okay, so and how much have you budgeted for that? What's your kind of capital budget that you're aiming for there?
We estimate it's going to cost about $3 to $4 million to build the pilot. And keep in mind that we are just building our ion exchange system, and it is a simple process using columns. So it is, and in a commercial sense, these are modular. So you don't build it bigger, you build lots of them. So in a pilot, you actually are building something that's near commercial size, not quite, but probably very near commercial size, to test all the parameters. And then from there, you've de-risked a lot of the way to commercial. So 3 to 4 million to build that, and then about $1 million to operate it for the course of about 6 to 12 months, depending on, we may move it around to a couple of different sites, depending on the results of the drilling, really.
And each module could produce a few hundred tons. Is that, in the test, is that what you're trying to do? Or are you talking a few hundred kilograms, or, what are you, how long do you run it for? And I mean, what I'm trying to work out is that by the end of the year, might you have a product that you could then take to the next stage and kind of start looking kind of chemical specifications, or is it too early to start thinking of that part of the chain? No,
we're definitely have plans for that. The timing is still uncertain because it depends on the pilot, but we are working through with, as you mentioned, conventional ion or lithium hydroxide production process. So that's not our tech. We're working with other companies that build that sort of processing to test. They all have a testing facility and the ability to take our concentrate that we produce and perform the work that they need to understand the costs and do that. And that process will produce lithium hydroxide. So, there's sort of two phases of that. One is that in a smaller way, we can start now running the prototype that we have for long periods, generating concentrate and getting a smaller test done. Once the pilot's running, we will take a large portion of that we produce, the concentrate we produce from there, and do the bigger scale testing. And then potentially even bring that technology to the back of our pilot as well, and produce the hydroxide on site. So that's that. We call that phase 2 of the pilot. Is if we were to bring that process to site. But right now, because all of these companies have testing equipment at large scale, and that they are confident that whatever scale they have in their testing facility can be commercialized, because that's what they do for a living, that may be all that's necessary for us to have the confidence to build a commercial plant.
So what the input into that back end is a enriched lithium brine, is that correct? So that what your pilot plant is doing is taking the 75 milligrams per liter brine and turning it into 5,000 milligrams per liter.
Yeah, we can get it up to 5,000. We generally sit somewhere between 2,000 to 3,000. But the main important piece there is that it also doesn't come with the impurities. So along with 75 milligrams per liter is 50,000 milligrams per liter sodium and 25,000 milligrams per liter calcium. And when we get it out, we get 2,000, 3,000 milligrams per liter lithium, and we get 200 to 300 milligrams per liter magnesium and 400 milligrams per liter calcium. So what we're sitting with here is something that's about 60% lithium, going from something that is, in terms of percent, like 0.00001% lithium in the brine to 60% lithium in one step. And I think that is the really important part here. If you look at a hard rock mine that makes a hard rock powder concentrate, that concentrate is 6 to 7% lithium.
Right.
So, we're able to get 10 times that concentration in just a simple ion exchange column. So the cost, therefore, is very, very low because we don't have a big cleanup stage. After that, we still have to refine it. We still have to get it to 99.9%, but the energy and effort to do that is drastically reduced.
And forgive me if I'm asking stupid questions. I'm so new to this whole thing. The sorbent, which is the kind of the magic sauce in this process, is that easy to make? Is it expensive to make? Does it wear out? Do you have to replace it? Is it a kind of a high cost additive to every batch that you do, or would it go on a rolling basis when you're in commercial production? How does that work?
Yeah, so the best way to think about it is a cost, ongoing operating cost. It doesn't last forever. No ion exchange resin or sorbent lasts forever. And so if you look at our economics, about $400 of the $3,600 OPEX is the cost of the sorbent on a yearly basis. And what that means is that looking at economic sensitivity, right? It's the project is not sensitive in a risk perspective to the cost of that material. So let's say that it doubled, right? The total project cost would go from 3,600 to 4,000, which is still lower than most of our competitors in the space, and that's doubling from the PA. So we're not very concerned from that economic standpoint, which is what really the progress of the project hinges on, is can you do it economically? We're not concerned about the cost of the material. So I think right now it's simply about scale. Can we do it bigger so that we can do this commercially?
And presumably got a good patent or two on that sorbent.
Yeah, absolutely.
So thank you. I understand things much better now. Can you kind of point me to what you see as your kind of news flow kind of milestones for the course of the year that you think the market should sit up and take notice of during the next, I don't know, wherever we are, 11 months of the year? Yeah,
I think the big things are, we've been talking about our goal of getting to the point of having 3 big things accomplished. And I think that if everything works out the way that we see them working out, we'll probably get all 3 done. And if we won't, we'll be very close to all 3 of these done this year. And these are company milestones. These are things that we knew we needed to do in 2017 when we went public, that we've been working towards step by step. And so they're huge things. So the first is the pilot. Obviously, we need to demonstrate that this can work at a near commercial scale, at least in terms of 1 unit operator, right?
Yep.
1 module. And so that is incredibly important. And the majority of the energy, the majority of what we're spending on a monthly basis, our burn, goes towards that goal. And again, at some point it becomes out of our hands because we hand it off to the fabricator to build. And then at that point, it's as long as it takes to build. So the timing is hopefully by the end of this year at the latest. The other big thing is that we're going to go out to the portion of the aquifer that we actually plan to produce from and drill 3 wells. We're planning on doing that after spring break up here in Canada, so in June-ish. And we're going to drill these 3 wells, and they will be outlining our M&I area, and they will detail the information we need to develop the aquifer management plan for commercial production. And that feeds into the M&I, feeds into the pre-feasibility study to book the first DLE reserve globally. So that's a big goal for us as well. And then the other one is the hydroxide. So demonstrating that we can go from what we call brine to battery, right? We can go from a 75 milligram per liter brine to something that is at a chemical state, so a hydroxide that is pure enough to be directly sold to the battery market.
Yep.
And so those 3 big milestones should all be accomplished in 2022. And if not, we'll be talking about like the pilot's turning on in January sort of thing. So we'll be very close if we don't get them all done this year, but we're marching very closely to all 3, which is just, for me, it's incredibly exciting because, it's been a build up to this for lots of years. Yeah,
absolutely. Great. And all the rest of it, the background, the kind of the lithium market, the assured provenance, all of the ESG stuff, that's completely fine. I can get my head around that. Thank you very much. I think the next thing to do is for me to sit back and watch you work incredibly hard, and for you to come back and explain how you've smashed it out of the park.
Yeah. And we'll keep you updated as we go. Obviously, for those watching, can check out our website at e3metalscorp.com and sign up to our newsletter. And we continually update the market on things that are happening at E3, and you can follow the progress. I think it's going to be a great year for us.
Yeah, great. And I commend you on your copy. Your marketing materials are first rate. I see a lot.
Thank you.
Good. Well, nice talking to you. Thank you very much. And I'm sure we'll speak again in the future.
Yeah, thanks for having me on the show today.